Starting with the basics, what stood out most from Alibaba's results?
Right. Clearly, the very strong margins across key businesses, such as the international commerce, China logistics, really stood out from these results. And it seems like, the company may be able to continue to hold on to the leaner cost structure for the rest of the fiscal year.
What about the lifting of margins throughout the rest of fiscal 2023? If we assume the number of new COVID infections in China continues to rise.
Right. Clearly, that is one of the swing factor, something that I think the whole market is monitoring, because we are seeing an easing of COVID curves. But yet, I think sentiment on the ground, with the number of cases rising, is igniting fears of the spread of the virus. And that's not really going to help sentiment or buying, impulse in the near term. We will have to actually wait for the next 1 to 2 months for clearer signs, particularly as we step into the Lunar New Year that is a little earlier in January, in a couple of weeks' time, to see whether that will be a trigger point for consumer sentiment.
There's been a delay in Alibaba's completion of a dual primary listing in Hong Kong. Should investors be concerned about this?
Well, I think the company is still on track for a primary Hong Kong listing. There's been some delays in the completion because of a stock ownership scheme that they're actually looking at. Now, clearly, if we actually get an escalation of the US-China tensions and talks of the risk of a forced listing come through, that's going to put some volatility on the share price. But I guess fundamentally, I wouldn't be too concerned.